Here's one thing that a lot of people don't realize. Most business lines of credit from commercial banks do not ask for bank statements. So if you were to go to M&T, West Banco, Truist, they will ask you for business tax returns, profit and loss statements, but they're not going to ask you for bank statements. Now, I've been in this funding financial services game going on 17 years. So I started in 2008 when I worked for CDFI. That's a community development financial institution. I then went on to partner with some of the top banks and fintechs in the United States. I own a direct lending company and manage a private credit fund. So I've seen a lot of requests and analyzed a lot of deals of business borrowers seeking funding. Now, despite funding tens of millions of dollars every single year over the last 5 years, there's still a lot of borrowers who get denied. In fact, nearly 90% of business loan applications from commercial banks get denied. And it's not because of your credit score, it's not because of how many trade lines you have or how much business revenue your business is generating. The reason why most business loan applications get denied is because the borrower, for one, does not have a strategy and they don't know what type of borrower they are. So there's different borrower profiles. That's why in today's video, I'm gonna be sharing with you the 6 different borrower profiles and tell you the proper strategy. Now, the reason why strategy is so important when it comes to the funding process is because you have to understand what data points that you could leverage to your benefit. But first, you have to understand what type of borrower profile you fall under. Now, borrower profile number 1, cash and carry. Now, this is a borrower that does have consistent and recurring or predictable revenue, but they have no financial paperwork. So they don't have tax returns, profit and loss. They probably don't have any type of bookkeeping, and they have poor credit, so derogatory marks on their consumer report. Now, believe it or not, a lot of these types of borrowers tend to be celebrities, athletes, or maybe just business owners who've seen a lot of success where they're generating a lot of cash from their business to where they never really needed to actually utilize credit. So again, these could be businesses that, are just very cash heavy, or maybe they have 6-figure or 7-figure monthly revenue. They've never really had to utilize credit because they've been so cash heavy and they've paid everything in cash. So a lot of times with these borrowers, they're not very organized, and maybe they do have derogatory marks on their consumer report. So there are certain types of credit products that they can't apply for despite having high revenue. Now, I've even seen people comment where, they're making 6 figures a month, but because they have poor credit and they don't have financials, they still can't get approved for, let's say, traditional lines of credit from commercial banks like Bank of America or Chase or Truist. So when you only have cash, you can go after what's called cash flow based underwriting. So cash flow based underwriting could be a lot of these fintechs where you don't have to have the highest credit score and you don't have to provide any type of financials. You could just provide, let's say, bank statements and still get approved. Borrower profile number 2, I like to categorize this as an unorganized business owner, right? So they do have consistent revenue, right? So they are generating transactions, they're making sales, so they have steady, recurring, or predictable revenue. They also have excellent personal credit. So this is a prime credit borrower. However, they have no financial paperwork, so unfiled taxes and no bookkeeping. And actually, this is probably one of the more frustrating types of borrowers to work with because they're not maximizing to their full capacity, right? So they should be able to qualify for business lines of credit at commercial banks, but because they're unorganized and they haven't taken proper measures to organize their finances, they're only subjected to, let's say, alternative lenders with high interest, or let's just say business credit cards where they're not asking for financial paperwork. Now, a lot of times with these businesses, it's actually costing them a lot because they're unorganized and because they haven't organized their information. Now, again, these are borrowers that have a lot of potential if they just get organized. So I suggest if you're this type of borrower, what you need to do is hire a bookkeeper and hire an accountant to go in and organize. And oftentimes I see with these business owners, they're extremely busy just dealing with their business that they never take time out to really organize. Borrower profile number 3. So I like to use this term funny money. Now, this is a borrower or business that has inconsistent or declining or fluctuating revenue, right? So this could be, let's say, a seasonal type of business where maybe they're just making the bulk of their revenue in, a certain time window. Or this could be, let's say, a lot of the COVID businesses, right? So a lot of businesses that had massive growth during the COVID period to now, their revenues have declined. So, their revenue is inconsistent. So it's not steady. As far as a strategy, again, they do have financial paperwork, so they can go to the commercial banks and provide tax returns and P&L, and they also have prime credit, so that's going to open the door. So any type of lending products that are cash flow based, where they're going to use Plaid or they're going to ask for 3 months of bank statements, this type of borrower would typically refrain from those types of applications. Now, there is some upside to borrower profile type number 3. Now, let's say, for example, you have declining revenue from one year to the next. It's 2024. Let's say you had a really good year in 2023. So you file your taxes, but let's say sales slowed up in 2024. Well, because you have your financial paperwork, your tax returns, and your profit and loss statement, and you have good credit, you could still go to the commercial banks and get business lines of credit. Now, here's one thing that a lot of people don't realize. Most business lines of credit from commercial banks do not ask for bank statements. So if you were to go to M&T, West Banco, Truist, FVC Bank, which I personally got a $100,000 line of credit from, they will ask you for business tax returns, profit and loss statements, but they're not going to ask you for bank statements. So let's say you do have fluctuating income, or maybe you have declining revenue through your bank statements, you could still go to the commercial banks and be able to get, different types of funding. So there is opportunity with this type of borrower. They could go after the business credit cards and the business lines of credit. But as far as like the cash flow base, like the corporate charge cards or a lot of the fintech stuff, they may not be able to go there because, again, they have inconsistent or declining or fluctuating revenue. Borrower type number 4, and this is probably the most frequent type of borrower, the no doc seeker, right? So they have no revenue, so no sales activity at all, and obviously no financial paperwork, because in order to have financial paperwork, you would have to have some type of financial activity, right? So no business docs, no sales activity, but they do have excellent credit. Now, I would say this is the majority of people who are seeking business funding online, right? Maybe their business is not transacting, or maybe they have a shelf corp. There's a lot of the shelf corp bros out there who they're just trying to get business funding with a dormant company that's not transacting. Now, in this case, all you will really be able to do is get the business credit cards. There's very few business lines of credit that are not going to ask for bank statements or some type of financial statement, right? The no doc seeker has very limited options. They're generally going to be limited to business credit cards. The 5th borrower type is what I call the dreamer, right? So they have no sales activity, no financial paperwork, no revenue, and they have poor credit. So derogatory marks on their consumer report, subprime credit. So there's virtually very few options that you can get. Maybe you can get some vendor credit, but as far as credit cards, loans, lines of credit, those are going to be off limit. And then last but not least, you have the total package, right? And this is what I aim to have my clients, when I work with them is, let's say you have consistent revenue, which is great. Also having your financial paperwork, your taxes filed up to date, your profit and loss, your record keeping and bookkeeping reconciled, at least to the most recent quarter, and also having excellent credit. So you're going to be able to get the fintech lines, you're going to be able to get the business credit cards and the commercial lines of credit. I put this together, and this basically illustrates the funding strategy by the borrower profile. Now, let me just explain this a little bit. We have these different intersections. This is just a basic Venn diagram. This blue circle right here represents business credit cards. Cash flow based underwriting, this could be alternative financing. This could be the fintechs, the divvies, the ramps, anything that's cash flow based where they're looking at your banking activity, right? And then you have the commercial blocks, commercial business lines of credit. Now, this is going to be, your Bank of America, your Truist, M&T Bank, Chase Bank, and I'm talking about business lines of credit or business term loans. As far as, the type of borrower profile, let's just sort of go over this. Now, you have the dreamer, right? So they're not going to be able to get any of these because, again, poor credit, no financials, no revenue, no paperwork, right? And then you have, again, this is the first borrower pro type, the cash and carry. Now, because they usually have poor credit, right? And again, this is, from what I've experienced, this is usually going to be business owners who are generating a lot of cash, and maybe they've only dealt in cash, their entire business journey, because luckily they've been able to, generate cash immediately. So they've never really had to rely on credit. I also see like a lot of athletes, entertainers kind of fall into this category where they make a lot of money, but they never attended to their personal or business credit. So they're not going to be able to get, let's say, business credit cards or commercial lines of credit, but mostly just the cash flow based underwriting, right? And then number two, you have this unorganized business owner, right? So they do have good credit and they do have revenue, but because they have not filed their taxes, or they haven't done their accounting, or they're not reconciling their books, they can't go and get the commercial business lines of credit. Because with the commercial business lines of credit, usually they're going to want tax returns, a profit and loss statement, a balance sheet, a personal financial statement. So they're going to want a lot of paperwork. This group right here can easily get into this category right here, the total package, where, they're able to get all of these different, funding resources utilizing these different strategies, right? Cash flow based underwriting, commercial blocks, and business credit cards. Now, all they would have to do is hire a bookkeeper or an accountant to organize their financials, make sure their taxes are filed, and then they would move into this middle category right here, the total package, which is self-explanatory, right? And then right here, you have the no doc seeker. So again, the no doc seeker, this is usually someone who has good credit. Again, the shelf court bros who, they're trying to get funding just based off of the strength of the personal credit of the beneficial owner of the business, right? So the no doc seekers usually can't get business lines of credit, maybe a handful, but not the majority, right? And they're not going to really qualify for cash flow based underwriting unless they somehow, structure deposits into a business checking account. But just right off the bat, if they're just trying to get, funding, the business credit cards is going to be the most direct pathway. And then you also have this funny money, right? So again, inconsistent revenue or maybe declining revenue. A lot of these people try to avoid PLAD or try to avoid providing bank statements. They do have good credit and maybe they do have previous year's financials. But again, because of the inconsistent banking activity, the inconsistent revenue, they're not really going to be able to leverage the cash flow based underwriting. So that's why they would fall between the business credit cards and the commercial business lines of credit. Most people watching this video, you're going to fall into one of these 6 categories as far as your borrower profile. And based off your borrower profile, this will basically let you know, okay, which of these funding strategies can you actually deploy? Because again, when it comes to funding, you have to use your data points to your strength. Right? If I post about, a business line of credit from Chase, which let's say if you're not an existing customer, you're going to have to provide 3 years of financials. Well, then if you haven't filed your taxes or you don't have your paperwork, you can't apply there, right? Or if you don't have excellent credit, you're not going to be able to get the, business credit cards or the business lines of credit. Now, whether you need bookkeeping and accounting, personal credit restoration, or a funding strategy to maximize your access to capital, I've dropped links in the description of the video for you to get started. Anyways, that's all for today. Until next time, take it easy and we'll talk to you soon. Peace.